Now that we're getting the rate cut, I think we're going to get an acceleration of the gold price increase because now you have BRICS dumping treasuries for gold, and you have the Fed cutting rates in the face of a U.S. government debt default. Now we got a U.S. government debt crisis, and we're cutting rates. So what it's going to do is going to create a rally that the BRICS are going to accelerate their bond dumping because it's going up in value bond. We're trying to create a bond rally in the face of a debt default event. And that, I believe, is the height of irresponsibility, and we're going to pay for it. I think we're going to get a lot of momentum after October, where the dollar is going to be down below 50% on international payments. That's coming.
A potential Federal Reserve rate cut during a U.S. government debt crisis could lead to a sharp rise in gold prices, especially as BRICS nations dump U.S. Treasuries in favor of gold. As the Fed cuts rates to spur a bond rally, the BRICS selling could actually accelerate, undermining this strategy. The timing of the rate cut amidst a looming debt default is seen as highly irresponsible, which could have significant consequences. After October, the momentum might grow, with the U.S. dollar likely to fall below 50% of global payments. An economist and financial commentator known for his insights on global financial markets, Willie, exposes Fed has been talking about rate hikes and cuts for months without taking action, while BRICS nations have been dumping U.S. Treasuries, offloading trillions of dollars worth. Now, with the Fed finally cutting rates in the face of a U.S. government debt crisis, gold prices are likely to surge further as BRICS continue shifting from bonds to gold. This rate cut is happening during a dangerous moment, unlike when Italy faced a debt crisis and raised rates. Trying to create a bond rally during a potential U.S. debt default is seen as highly irresponsible, and this bond and stock rally may be short-lived as the Fed's options shrink. Willie explains that there's skepticism around official economic data, with claims that the government is lying about inflation, the job market, and overall economic growth. Inflation is said to be much higher than reported, with actual increases in costs between 6% and 10%, far above the official 3%. The actual unemployment rate may also be higher than stated, especially when factoring in those unable to work due to vaccine injuries. The economy, despite claims of growth, is argued to be in a prolonged inflationary depression since mid-2021, with negative growth masked by understated inflation figures. If you enjoy the video, please give it a thumbs up and subscribe to stay updated on our latest content. Currently, only 20% of our viewers are subscribed. Help us reach our goal of 1,000 subscribers by hitting that subscribe button.
The Fed's not going to do anything for a while. They're going to talk a lot. They're going to talk about a rate cut and then say, well, we can't because we got inflation. And that happened about 3 times. And they're going to say, we're going to talk about, they're going to talk about a rate hike. And then they're going to back off it saying, well, we were on the edge of a recession when we're actually in a depression. And that happened about 3 times. So they talk about a rate hike, they talk about a rate cut. They talk about a rate hike, they talk about a rate cut. And they did this for several months, Chris. And all during that time, the BRICS nations were dumping treasury bonds to the tune of between $2 and $2.5 trillion worth of treasury bonds. So if the Fed didn't do anything, you can't say the gold price went up necessarily because of expectation of rate cut. Now that we're getting the rate cut, I think we're going to get an acceleration of the gold price increase because now you have BRICS dumping treasuries for gold, and you have the Fed cutting rates in the face of a U.S. government debt default. Do you remember back 14 years ago when Italy was facing a debt default? What did they do? They went over 10% on their official interest rate. It went up, 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 and that was the pigs' credit crisis. Now we got a U.S. government debt crisis, and we're cutting rates. So what it's going to do is going to create a rally that the BRICS are going to accelerate their bond dumping because it's going up in value, the bond. We're trying to create a bond rally in the face of a debt default event. And that, I believe, is the height of irresponsibility, and we're going to pay for it. I think this bond rally is short-lived. I think the stock rally is short-lived. They're lying about inflation, they're lying about the job market, and they're lying about the economy. Let me back those 3 statements up. Let me back them up. We have all kinds of different components within the economy that are going up by 6 to 10%. So to claim that the overall is 3% is poppycock nonsense horseshit. We got a labor market that they claim is like 3 or 4%. I don't know what their nonsensical number is, but notice that they say that the participation rate is like 72%. Therefore, one minus that, the unemployment rate is 28%. And of course, you got some people who are vaccine injured and they can't work anymore. So they're not unemployed, they're more like crippled. Disabled. So maybe we need an unemployment rate and a disabled rate so that we can understand what the true participation rate is. And whatever comes out of Powell's mouth is pure nonsense bullshit. The economy is not growing at a solid rate. The economy is like at minus 4 or 5% because that's the lie on the consumer price index. We've been stuck ever since the lockdown in mid 2021. We've been stuck in an inflationary depression. It was like a minus 7% recession the first year with 15% CPI. Then the next year, it might have been 13% CPI and maybe a minus 4% depression.
Jim Willie recalls that at the upcoming October meeting, major announcements and details are expected, especially regarding payment systems like Enbridge and Russia's use of XRP as an intermediary in financial transactions. The BRICS nations may reveal more about dumping U.S. Treasuries, buying gold, and funding the new development bank. This meeting could mark a significant step toward reducing the U.S. dollar's dominance, potentially pushing it below 50% of international payments. It may signal the funeral march for the dollar's global dominance as non-dollar payment methods gain momentum. The BRICS nations are working to reduce the dollar's role in trade, building critical mass with their financial systems. To ensure reliability, they've hired German financial engineers to conduct live alpha testing on their payment networks. If successful, the BRICS could see rapid progress in establishing alternatives to Western banking systems. This would likely lead to these nations further building their gold reserves, potentially driving gold prices above $3,000 in the coming months. Let's get back to the interview.
Look forward to the October meeting where we're going to have more announcements, more developments, more revelations, and more specifics. In the meantime, Russia announced that XRP is going to be the official intermediary between all their central banks, financial institutions, and banks, and all the other side, the merchants, and the ones that take payment for whatever product or service. So the Russians let it be known that XRP is going to be important to them. Now, I'm looking forward to Kazan in 2 weeks because we have been conditioned. We have been warned that a lot of details are coming in Kazan. A lot of details on payment systems, different options to operate under Enbridge, maybe a lot of specifics and details and perhaps enhancement. Bridge, which is a payment system and not a protocol. We're probably going to get more details about the digital ledger and its usage and some of the features and just some of the volume. We're probably going to get more data on dumping treasury bonds and buying gold, more volume. Probably going to get more details about the BRICS development, the new development bank, NDB they're calling it. We may get more details about how they're going to fund the new development bank. Okay, these are all areas that I'm going to be devoting attention to. And, you know, when this meeting is over, I'm going to need to do my chapter on the BRICS for the October report. And that's what I did back in June, except back in June, it was like the 15th to the 17th. This is later in the month, so it's going to be a little more difficult to get a lot of information that's specific and confirmed about the BRICS meeting. I think this is going to be a big splash, okay? And what I'm hearing, you know, just like in a marquee message, this is where the king dollar will meet its funeral march. This will be where the BRICS lay out all the different non-dollar payment methods. I think we're going to get a lot of momentum after October where the dollar is going to be down below 50% on international payments. That's coming. Dollar usage and trade payment. And remember, the BRICS are developing very serious critical mass. And what they need to do now is develop the integrity and reliability of their systems. That's why they're doing alpha tests. And I heard that they hired German financial engineers, Germans. They hired them. This is something that the East is not good at, banking. Banking channels and cables and networks and interoperability. And wow, the West is really good and we've corrupted it. So the BRICS have hired German financial engineers. And, who do you suppose is doing the alpha testing? Okay, they're doing, this is live testing. We're going to get results of alpha testing, results of enhancements, and a lot more news I call meat on the bones. We got the bones in June. And this is going to be, I think, rather exciting because if they do get their act together, if they do get the various vehicles working and tested and announced with details, you're going to see a big acceleration in these nations building their gold reserves. And I think that as a result of this, Chris, the next several months, we're going to be over 3,000 in gold.
The Federal Reserve's potential rate cut amid a U.S. debt crisis could ignite a gold price surge, especially as BRICS nations continue to offload U.S. Treasuries in favor of gold. This shift, along with alternative payment systems and a weakening U.S. dollar, signals a potential global reconfiguration in financial power dynamics. With skepticism growing around official economic data, the actual state of the economy may be far more precarious than reported. How might the BRICS nations' continued sale of U.S. Treasuries impact global financial markets? Could the Fed's strategy of cutting rates backfire if the U.S. debt situation worsens? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel first, watch the video, and turn on post notifications for more videos like this. Until next time.